Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Michael Riedl, who's CEO, Billy Green, CFO, and Martin Surzyn, Head of Investor Relations, all at Team Internet. Starting off, I think, logically with the CEO, Michael Riedl, a decent performance in the first half. You improved most of the metrics. How do you explain that?
Right. We explain that by an approach that is both diversified and still strongly vertically integrated. So we now operate a series of platforms, and you will have seen that we changed the narrative slightly from doing consumer journeys, which is maybe a little bit technical, to digital audience matching. So all our three platforms match audiences with advertisers that are not innately connected to each other. So, for example, we bring together TikTok users with the audience, with the advertisers advertising on Google, or we bring together the audience on Facebook with large brand advertisers, like, for example, Temu and Shein in the United States, or we bring together people that start their product search on Bing with the marketplace partners on Amazon. And this gives us notable resilience because we're not directly tied to one type of advertisers or specific vertical. So we do advertising in more than 2,000 different verticals in 160 countries around the world. So we're not as vulnerable to specific market changes as many other way more specialized players are. And at the same time, we're also creating synergies between the businesses. So we have businesses which advertisers would call low intent, like our content properties of the recently acquired Shines, or which are very high intent, like our BGL product comparison websites, where it's really about closing the deal and selling something. And how do these play together? Let me explain that in a minute. So on these high intent websites, not every visit results into an actual sale, which means there's a lot of page impressions which go unmonetized currently. And here the plan is that we use the ad inventory that is normally advertising on Shines and bringing them on these high intent properties to also generate revenue from the page views that normally go unmonetized. But at the same time, we would also take conversion signals, like, for example, someone has bought a kitchen blender or someone has clicked on an ad for life insurance in the case of our Tonic platform, and provide this information to the advertisers who normally appear on our Shines properties, which would give them an opportunity to make much more specific bids and also uplift the revenues here. And so over these two vectors, diversification on the one hand and integration between the assets, we deliver the results that we do.
Going on to Billy, I did mention at the start that you managed to sort of make sure that almost all the metrics have improved. Is there any added information on that you can provide?
I suppose the only added highlight beyond what we set out in our investor presentation is that it's pleasing to see that even in a period when gross revenue growth is challenged by some external headwinds, net revenue is growing at a faster pace because we've improved our gross margin percentage, and that hasn't always been the case with the business. In some periods, gross margin percentage has declined slightly when we've had due to our product mix, when we've had some of our lower margin products have grown faster than our higher margin products. It's the exact opposite in the 6 months, first half of this year, because it's the higher margin products that are growing and the lower margin products are not growing at as fast a rate. So one of the more impressive metrics, one of the more impressive growth metrics is our net revenue growth. Although, as I've said in previous quarters, you go all the way down the P&L, and we've got operating profit growth. We've got profit before tax, profit after tax. So we're profitable at all levels of the P&L, and that's something that we will continue to deliver on.
And just going on to Martin, I've actually followed your company almost since the start with the previous incumbents and everything else. So I've watched the dream become a reality. Do you think that on the London market, people are fully aware of what you achieved and your international scalability, etc.?
Yes, so we continue to market the company widely, and I believe that through the investor meetings and the various conferences that we attend, we are able to explain our business and attract new investors on the London market.
I suppose if you were from Palo Alto, that would maybe be more glamorous than being just a British company trying to make it big.
Well, Team Internet does generate more than 50% of its revenues from North America, so we are definitely present in the markets that are driving the technological shift in our world today.
Sounds great. I mean, have you got anything to add to that, Michael? Just in terms of maybe switching to an American accent or something like that to become one of the Magnificent Seven. But I mean, there is as I said, there is a perception, obviously, that American company and a UK company, just like for like, people say, well, the American one has the potential, and the American one is the more glamorous one.
Well, not talking about glamour, just facts. Because we also agree with your observations, we started trading on the OTC QX, so the quality segment of OTC, in the United States 4 months ago, and we already see notable inroads, even though it's still modest total numbers. The US ownership of the company has already increased by several factors, and we are going to continue our efforts to also promote our share in the United States alongside our promotion activities in the UK.
Michael Riedl, Billy Green, and Martin Surzyn from Team Internet, thank you very much indeed.